Episode 8 of The Wealth Show with Equity Kings. Welcome to The Wealth Show. My name is Tumisha Ramodisa and I'm accompanied by my co-host Sebonga Chuma. Welcome to the show. For those who are listening for the first time, welcome, and I hope you have a good listen. So just a quick market update. We got the CPI July numbers, if I'm not mistaken, or is it the August numbers? The recent CPI numbers show that we had a 5.4% year over year CPI, which means there's a 5.4% inflation rate. It's really not changed from the previous month. But then month over month, we got a 0.5% gain in the CPI, despite estimates at 0.9%, which means it was a big miss for the CPI, but it's still relatively high. So all these transitory guys, relax. It's not it's not transitory. Let's chill there. The CPI numbers are still pretty high. Gold rallied. In fact, gold did rally after we got the CPI numbers, and then it kind of crashed a bit, and now it's just hovering around 1750. So gold isn't really doing much as an inflation hedge. That's what people think. I'll debunk that myth in a separate video or in a separate podcast episode. But all these CPI numbers is telling us that something is going on. Maybe inflation might be transitory. Who knows? It might not be.
It is.
That's a topic for another episode. I don't want to talk about the transitory thing.
Okay, I don't know, but I've got something. I don't know. I can't keep it. It's burning my chest. I just gotta let it out on the mic.
We'll get there in just a moment. We get there in this episode in just a moment. Don't worry, yeah. But really,
okay.
The market is telling us something. I haven't really checked what's going on with Nasdaq, but gold, something fishy is going on there. And some people even think that the gold market is manipulated. The paper price is manipulated because of all these bullion banks and etc. But really, what I wanted to talk about today and grab your attention on is this whole Bitcoin thing, because we saw Bitcoin rally and Bitcoin is just above 45,000. It's touching its resistance. It's testing its resistance there around 45,000. I don't think it'll break above 46,000. Who knows? If it does, then maybe the next stage is for 50,000. But it might also be a bull trap, because the same thing happened in the 2017-2018 crash. The same thing happened in 2014 when Bitcoin also crashed. It created this false hype, this momentum whereby there was a bull trap. So you never know, this might be a bull trap. In fact, I've read or I've seen many people's analysis saying that this thing might be a bull trap. But besides what's going on in Bitcoin, what I really wanted to talk about is Tether, because for those who don't know Tether is a stable coin, or apparently it's a stable coin, but I like to call it an unstable coin because it's the most unstable thing ever. It's so unstable that people don't even understand what's going on. This thing provides the plumbing of the Bitcoin ecosystem, or rather the cryptocurrency ecosystem, because Tether, which is basically a stable coin pegged to the dollar or any fiat currency, depending on which fiat currency you're using. So let's say I'm using $1, right? I want to buy Bitcoin, right, with maybe in Coinbase or whatever crypto exchange like Luno or whatever the hell it is. And then it's easier for me to buy Bitcoin with Tether. So instead of buying Bitcoin with dollars, because of the transaction fees are going to be so high because the hash rates are dropping. So instead of using my actual money, using my Visa or MasterCard to buy Bitcoin and pay higher transaction costs, I can buy Tether first, because one Tether equals $1, apparently, right? That's what they're telling us. So when you have $1, you can get one Tether, right? Because it's pegged to the dollar. It has a 1-to-1 ratio with the dollar. If you're using South African rands, it has a 1-to-1 ratio with South African rands, because there's different tethers for different fiat currencies, but it's the same thing, right? So if I can buy a Tether and I can buy Bitcoin with Tether. Therefore, my transaction costs are very, very low, extremely low if I'm buying Bitcoin with Tether, because it's cryptocurrency and apparently it's a stable coin. So there's many reasons why people are buying it. As I mentioned, the first reason is transaction costs. Also, people are buying it for taxes. So think about why people are buying it for tax evasion or tax avoidance, rather, for lack of better words, is because Tether, when you make profits on Bitcoin, let's say you buy Bitcoins with your Tether, right? And then Bitcoin goes up by, let's say, 50%, right? And then you don't want to sell your Bitcoin and get dollars, because if you get dollars, technically you owe Uncle Sam capital gains tax. You own Uncle Sam capital gains tax. I don't know what the capital gains tax rate is, but you definitely owe them capital gains. But if you sell your Bitcoin, let's say you make a profit and you sell your Bitcoin for Tether, you don't owe Uncle Sam anything, because they don't control cryptocurrencies. So that's another reason. And maybe people can buy other cryptocurrencies. That's why I always say people who are rich in cryptocurrencies are only rich on paper, because when they sell their Bitcoin, when they make a profit, they're just selling it for Tether. They're selling it for nothing. And I'll explain why this is nothing, because it's an outright scam. It's a legitimate Ponzi scheme. Because Tether, if Tether is backed by the dollar, right? See, think about this. If something is backed by the dollar and therefore pegged to the dollar, it means Tether must have 100% of its reserves has to be US dollars, right? It has to be fiat currencies. 100% of their reserves have to be fiat currencies, so that if someone wants to sell their Tether must give them dollars, right? So they need to have dollars in reserves to back the Tether that they're issuing. But that's not the case. That is not the case at all. Tether doesn't have 100% of dollars in reserves. In fact, they have a fraction of that. Literally, they even admitted it when they released their balance sheet and what's going on in their reserves, because apparently they're trying to be transparent. It's probably the most transparent Ponzi scheme ever, because they're literally telling you it's a Ponzi scheme. Tether is not backed by dollars. What they do is when people use their dollars to buy Tether, what happens is Tether gives them their Tether tokens, and then what happens is Tether takes those dollars. They don't keep them as reserves. What they do is they use it to buy other investments, to purchase other things like gold, commercial paper, corporate debt. I mean, so many things that are probably junk bonds. They just use people's money for stupid things that are highly risky. And imagine if the value of that investment goes down. Think about what happens, because if Tether is supposedly backed by the dollar, it has a 1-to-1 peg with the dollar. It means that 100% of Tether tokens should be going at the same rate, or the value should be moving at the same rate as the dollars. But what's happening is we're not seeing that with Tether. What we're seeing is Tether has a bunch of Tether is literally a crypto scam, because Tether, only 75% of Tether's or 76% of Tether is backed by actual cash or cash equivalents, right? So this is not cash. It's not like the dollars that people put in. It's something equivalent to those dollars. So when you break down into that 75%, 3% of that 75% of cash equivalents, 3% of it is actual cash. You see, so that is 3.3% out of 75% of the whole Tether. So think about that. That means each Tether token is there's only 0.3% of dollars to back up that one Tether. 0.3%. Imagine you thinking that you put in your dollars in Tether, and then Tether just keeps your dollars for you, because it's simple to do that. I mean, it doesn't take alchemist to figure that out. All they have to do is they have to keep their IOUs. It's not like people are giving them cash. They're giving them IOUs. They transfer bank liabilities to one another. So there's nothing unsafe about that. But then Tether goes and invests with people's money into the stock market, into commercial paper, into gold, into corporate debt, especially even into reverse repo. Think about how crazy that is. Reverse repo, so risky. How safe is that, right? Reverse repo. Obviously, I'm being sarcastic. It's extremely risky. And also, they've also put in people's money. What also backs Tether coins is 1% of Tether is used to purchase digital assets, cryptocurrencies. Imagine how stupid that is. People use Tether to buy Bitcoin, but then the Bitcoins that people are buying are somewhat backed by Tethers, which is kind of stupid, because if Tether is using people's money to buy Bitcoins, it means that those Tether tokens that people are buying Bitcoin with is kind of founded on buying Bitcoin. like in a way. So it's kind of stupid that way. And there's also claims, before I just conclude with this Tether thing, there's also claims that Tether is issuing more tokens than they get in dollars. Because think about it. If people want Tether, right? And then they just create they deposit 1 billion into Tether, right? They give Tether 1 billion, Tether Inc., right? Or through an exchange or whatever. I know that there's other mediums which you can go through. But if you give Tether, if Tether gets 1 billion in dollars, right, they have to give 1 billion in Tether tokens, because one Tether is backed by $1, or one Tether is backed by 1 South African rand or 1 euro, depends which currency you use. So I'm talking about the dollar, right? So if Tether is supposed to have the equivalent amount of the dollars that they receive, what happens is, right now we see that Tether actually issues more tokens than what they actually get in dollars, which means these extra tokens that they're issuing out are just fake. It's technically fake. It's artificial Tether, which means if Tether is issuing artificial money, that is artificially propping up the price of Bitcoin. Think about that. Think about that for a moment. Since there's so much excess Tether, so much artificial Tether, imagine what that has done to cryptocurrencies. The only reason why cryptocurrencies are in a bubble, or they're at least going strong, is because of Tether. Imagine if Tether collapsed, because this thing is just providing artificial demand. Once Tether collapses, the whole crypto bubble collapses. It could even go down to 1,000 per Bitcoin. I mean, you don't know where the floor is. So
Tether, is that your expectation?
Yeah, exactly. You don't know. And just as I'm concluding, what happened is, we know Biden is doing this infrastructure bill, right? So they have all these crypto regulations inside this infrastructure bill. And one of the regulations was this rule that said, I don't know if it's a national church, I think it's the SEC. The SEC can only says that they will have to, for stable coins, have these rules for stable coins. So basically what they are saying is they can choose which stable coins are deemed fit for society or something like that. So imagine the SEC could basically say, hey, Tether is a scam, because everyone knows Tether is a scam. We're just waiting for anyone who doesn't know Tether is a scam is probably oblivious to the whole idea. It's probably in the Ponzi scheme as well, because obviously you don't know your own bubble, as Peter Schiff says. You don't know your own Ponzi scheme. When you're in a Ponzi scheme, you don't know it's a Ponzi scheme, because you're already in it. You see, the only time you don't know the only time you know it's a Ponzi scheme is when you get wiped out. So Tether might be screwed with this infrastructure bill. It might be screwed because they can just deem it unfit and outlaw it in America, and then it's done. It's over for Tether. Imagine what that would do to Bitcoin and all cryptocurrencies. I mean, those things would crash. I don't even know how far it could crash, but it could crash. This podcast episode is proudly sponsored by Libertex, arguably one of the biggest forex brokers of the 21st century. Libertex has a wide variety of financial instruments to trade with, from currency pairs, stocks, energies, and even a broader variety of commodities to trade. I personally use Libertex, and the one thing I love the most about this broker is their incredibly low spreads. Libertex has been operating since 1997 and has won over 30 prestigious awards worldwide, and is even a sponsor for Tottenham Hotspurs. So click the link in the description to sign up and enjoy the perks that come with trading with a world-class broker. So yeah, Sia, what's your take?
We're living in unprecedented times, Chief. That's all I can say. But hey, your prediction on Bitcoin, hey, I'm just a little bit shocked. Do you think all those accumulated years of hard work of Bitcoin mining could just go down the drain like that?
Because of Tether. The demand. Think about it. Almost all Bitcoins that are purchased with Tether. Imagine what happens if Tether goes down the drain. Because I've mentioned previously, because there's so much advantages of using Tether. So think about it. Sia. Imagine if those Tethers are worthless, or it gets outlawed. You can't use it. It's just nothing. It becomes nothing, and everyone loses confidence in it. Think about it. If the Ponzi scheme collapses, what happens to Bitcoin? All of this demand goes away, because only a few people buy Bitcoins with actual money. You see?
Yeah, that's true. Thing is, hey, I don't have a lot of information on Tether, but I'll take what you give, and I hope the listeners are also listening and they're taking something. because I really didn't know much about that. So now I
Yeah.
wanted to touch on the infrastructure bill because I feel this is where things get really interesting. I think this is where now we we get a platform where we can start to critique Joe Biden's presidency because I feel like economies now like are at their peak of recovering. And when I say recovering, I mean in terms of production. As the infrastructure bill has been passed, and we can see that vaccines are being rolled out, although the stats unclear. But then I wouldn't say you should expect a crash now, Dumisha, because I think now there's a lot of research with this COVID thing, and now I don't think the markets would react the same. Instead, as we are seeing, obviously now the government has went into debt. So let's look at some stats here. How much is this deal, this debt that Joe Biden decided to put Americans in? And here's the worst part. It affects the future generation. The debt that is made now affects the future generation because somehow inflation will come and will have to kick in. So I've got an article here, quote unquote. The Senate passed a massive bipartisan infrastructure bill Tuesday after months of negotiations. In total, the deal included 550 billion in new federal investments in American infrastructure over 5 years. Okay, cool. The package is far short of the 2.5 trillion proposal that Biden unveiled in March. So that is a huge amount of money. So, however, the package would add 256 billion to the deficit over the next 10 years. So we could use this data and look at the 10-year yields. So I those are Tumisha's analytical side. But I just want to talk about the housing market in the United States
Yeah.
and how I feel that the housing market plays a very huge role in economy and especially in running an economy. So there's this word or there's this law that Joe Biden passed out in the United States. I don't think it would have worked in South Africa because our environment is quite different. Although yes, the government could try their way and pass the law, but I think it wouldn't be as effective as it was in the United States. But at the cost of landlords, of which, when we look at it, the government said that people are not allowed to be kicked out if ever they don't pay rent, because the government says everyone must quarantine. So they passed out a law. The key word is a moratorium. Oh, pardon my pronunciation of that word.
Yeah.
So yeah, you can go and look it up. I don't know how to pronounce it. Like sometimes,
Moratorium. Yeah.
yeah, moratorium. Maybe you could say it like that.
Sounds Latin.
Yeah, just take the homophone and then Google the keyword. So what I feel is that now we're in this space of now people really do want to go back to work because the stimulus check, the government is cutting that, and the government now is trying to invest into the economy. But as you can see, it's all played out. First of all, people stay at home, government gives out money, and then you raise prices, and then you tell people to go back to work. And now they are going back to work with inflation. That means they'll have to work twice as hard. So Tumisho will also give you, I don't know, in the next episodes, like our, our hourly average earnings. If we can really analyze that data with inflation and look at the different percentages there, we can see that the rise of inflation does not play games. And then comparing to what the minimum wage is, you can tell that it's really a rat race. But with that being said, we can see that owning a house wasn't really such a lucrative thing in that period. Although it doesn't mean that the tenants they aren't supposed to pay back the rent, but then it's a risk because tenants are most likely to decide that fuck you, I'm gonna move out and then go find a new renting place. Cool. Now with that being said, I feel like the housing market is ought to expand now because if air flying opens up, that also opens up more opportunities within the economy. of which with the housing market, here's what you got to look at. Here's what people got to understand with the housing market and how does it influence the economy. So basically, whenever, let's say you buy a house, it's worth X amount of value. You buy that house. So obviously, you're going to want to fill the house with things. Those are goods. You're not going to fill the house with money. You're going to want to fill your house with goods. And now you're going to go out and there's going to be a demand for those goods. So this is where manufacturing comes in. United States now needs to manufacture its own goods, of which it's going to sell to people who are going to be buying new houses or people who are going to be migrating to the United States in the course. Now, you got to understand the fact of why the environment that United States is in is so much different and broad than it was in the 1980s, because that's when the economy really boomed. Now, you can't substitute the economy by just pumping out money, you know? So, thing is, it's the scale of the amount of money that is there in the world and the amount of goods that we have, it doesn't balance due to the fact that if every good and service was tied to a certain X amount properly, perhaps we could know how much. So, but money is inflated because the government does as it wants. It's IOUs. So with IOUs, it's just a number which the government can get to play around with. Okay. So now, why was the economy really strong? So we're going to look at durable and non-durable goods and perishable and non-perishable. So in the 1980s, 60s, arguably we could say that the United States was really heavy on producing goods. Now, to make examples, would be talking like automotive companies like Ford and TV companies, because a lot of electronical stuff were booming back then. So United States was producing, it was hard on labor. Cotton, like nice clothes and fashion, like there was a lot of production going on. I don't want to stay there and just do with the list, but you can go and research it. I'm just trying to give you the brief picture of what's happening. And now when you look at it now, it's the trade deficit of the United States is really bad. And it being bad, it inversely affects South Africa because we are tied to the dollar. We are not tied to the yen. Perhaps if we were tied to the yen, maybe we'd be stronger. What's your take, Demisho?
It also depends because as Sia said, America, when America goes down, we go down with it. Because think about it. Think about how these global economies are intertwined, especially with South Africa, right, as an emerging market. I mean, I think I posted a chart on my Instagram and my Twitter, or I think I posted it on Equity King's Twitter page. But it was comparing South Africa's inflation rate with America's inflation rate. They are literally the same. They literally move in the same direction. I mean, it's not the same numbers, but it literally, when it goes up, then America's inflation also goes up. I don't know which lags the other, but they literally have a close correlation. Just like all the other inflation rates around the world. Most of them have a close correlation, which tells us that, hey, these economies are connected, especially when you think about South Africa. You look at what's going on with South Africa, and you look at what's happening with America. We heard about stimulus. There's been stimulus going on, and oil prices go up. Think about it, the dollar, because of the petrodollar system. When there's inflation in the US, oil prices go up because the dollar gets weaker. But don't forget, we shouldn't forget that the dollar is a global reserve currency. It's not just the domestic currency. So the dollar might go down in terms of what you call this in terms of in the US domestically, but then it doesn't have to go down. It could go up in global terms because there's so much factors, there's so many cross currents that we cannot possibly begin to fathom what's actually going on here. There's euro dollars, so we haven't even considered those things. The whole system is connected together, especially with South Africa, our banks, right? And I presume, I'm just assuming with the central bank, I'm not sure about our central bank, if they hold euro dollars, but I know African central banks have been participating in euro bonds, which is basically it's where South African, or not South African governments can raise money. It's like when you issue bonds, you're basically issuing debt so that you get into more debt. You raise money.
Some sort of promissory note. That's all it is.
Yeah. So that's basically what it is. So when they issue euro bonds, it is a smart way to actually get euro dollars, because every country needs euro dollars or dollars, because the dollar is a global reserve currency. So you need those things. So you just issue euro bonds, etc. So the whole economy is tied together. It's extremely tied together. And Sia has a good point on that when he makes a reference to what's going on, and especially with America. Just to go back to Sia's point, with America.
Let me just put it like this. In South Africa, like do the math. Like, here's the simple inflated math. In South Africa, the government stimulus check is 350, like the basic. And in the United States, it's $350 or $80 a week, if I'm not mistaken. And in South Africa, it's in a month, sometimes 2 months. And some people never got the money. So now convert to $250, 250 rands, into dollars. We're roughly looking at around $25, $25 to $30, around there.
It is. So, like, think about it. Think about what's going on with all these numbers. And Sia, I just wanted to go back to your point on the dollar being, when they, back in the days in the 1930s, when it was a strong economy. I think we can both agree on that, right? Yeah. When it was a strong economy. Now it's probably the weakest, the most fragile economy on earth. I mean, not counting except Venezuela and Iran and Lebanon and all these countries that are. Think about it, the dollar, the US is so fragile because of, think about it. They used to produce, right? They had trade surpluses, and then Bretton Woods comes, the dollar becomes a reserve currency, 1944, somewhere there, and then now this forces them to run massive trade deficits because the whole world needs dollars. So you have to import a lot of goods, right? So you have to buy a lot of things from China, but at the time China was in communism, so no one was buying anything from China. So you buy things in South Africa and all these countries that South Africa used to run massive trade surpluses, massive. Right now we're in between. Sometimes we go down to trade deficit, but we're in between. Our trade surpluses go up and down, up and down. It's like we're treading on thin ice. But back then, and I don't mean to get political, this has nothing to do with apartheid or anything, right? I'm just talking about South Africa as a global economy. It was thriving because it had massive trade surpluses. So think about that for a moment and think about what happened to the US. Now they have to run massive trade deficits so that they can give other countries dollars so that they can buy the services, because those countries will accept those dollars. Because think about it, those countries like South Africa, we all need these dollars. We need these dollars so that we can buy oil, because all these things are priced in dollars. We can buy other things like gold, because gold is priced in dollars. You need dollars to buy a lot of things. So we needed those dollars, and unfortunately America couldn't run these trade deficits. It wasn't sustainable. So what they did was they needed a way to make this trade deficit thing work. So what did they do? The whole world decided that, hey, we don't have enough dollars. Remember, America was on the gold standard. So
look, can I just gold standard, hold that thought. And here's the thing, the reason I feel like they removed the Brentwood system and made the dollar is because the cost of also transporting gold from each reserve bank to another, and the risk involved then. But yet America outsmarted us, because I feel like in South Africa, our gold, like I don't know where it goes, I'll do research, but South Africa is colonized, and I have said that it's a third-party economy. So I do feel like United States knew that by removing this system and just giving people IOUs, they can control IOUs, but they are not backed up by the amount of gold they have, so they can manipulate the system. Hence, you see that their debt is so high because their debt is high due to the main reason that it's capitalism. We have other nations working for America, but yet, hence, we could say it could explode at a certain point in time if sanctions, because we all know, and now recently, I don't know, in the upcoming week, or I think Joe Biden is gonna have a talk with Xi Jinping, right?
Don't
Yeah,
make fun of brah, he'll come and kill you, brah.
they're gonna have talks, and then they're gonna cut a little bit of sanctions they had with the trade, because we know that Donald Trump left a lot of restrictions. So yeah, back to your gold going on system.
Yeah, what I was really saying is, obviously, Sia, you mentioned that the transporting costs were high, but not only that, it's because gold is scarce. I mean, the supply only increases by 2% every single year, consistently. Maybe some years it's 1%, but it usually means the average, it averages out at 2%. But besides the costs, also you have to think. Yeah, I said it's scarce, right? It's extremely scarce, so you can't create, because the dollar was a measurement of gold, right? So if the dollar is gold, the dollar was gold. It was just a measurement of gold. It was a way of measuring gold. So think about it. If everyone around the world needed dollars, technically it means they needed gold. So if they had all these pieces of paper and then they wanted to redeem it for gold, America, what happened was, I think it was in the 1960s, the US Treasury, what happened was, and the Federal Reserve, when all these countries wanted to redeem their dollars for gold, or yeah, in that sense, I hope I'm saying it correctly, when they wanted to redeem their dollars for gold, America couldn't take it because they didn't have enough reserves to match up the demand. So that led to the end of the gold window in 1971. And think about it, right? All these countries need dollars because it's globalization. Globalization 1960, 1970, somewhere there. Countries are starting to export with each other, starting to trade with each other because of all those globalization, globally synchronized growth and all these things. So you need a lot of money when there's so much globalization and all these economies are coming together as one global economy. So you need a lot of money. You need a lot of elasticity. And the dollar couldn't provide that elasticity. And that's why there was a euro dollar. That's why euro dollars came into prominence, to create money elasticity. And I've spoken about this with Kakeho before. So money elasticity. And this is why America had to run massive trade deficits. Even while they were running those massive trade deficits, it wasn't enough to provide this money elasticity. That's why all these countries in the world created euro dollars. You know, I read as a net bank report on the rise and fall of the euro dollar system, which is something I'll talk about in a separate episode when I'm talking about reverse repos and all these things. Maybe that's for another episode. But really, you can see that the US has just been going on a cliff. It's just been falling off a cliff since, and we are yet to reach the bottom. Soon we'll reach the bottom, and eventually, if you can even check, I'll pull up a chart or I'll post it on the Wealth Show's IG page or Twitter, on our Twitter page, Equity Kings. But there's a correlation, and George Gammon pointed this out. There's a correlation between the twin deficits, the trade deficits and the government budget deficits. There's a correlation between those deficits and the DXY, the dollar index. Think about it. When the trade deficits get worse, the dollar index goes down. It's a relationship that has been true for many years, for more than 20 years. So it's something very interesting. If we believe that these trade deficits are going to get worse, then the dollar is going to lose more purchasing power, is going to lose more value against other
not conspiracy.
in the future.
It's not
And
conspiracy.
eventually, the dollar index will go down to 40, let's say. And imagine if it gets down to 40, it means the dollar crashed. And if the dollar crashes, then we're going to have to use something else, maybe another reserve currency, whether that's cryptocurrency. Obviously, I don't want that because cryptocurrencies don't work. I'm not a big fan of cryptocurrencies. I'm a fan of the technology, but not a fan the currencies in and of itself, because it doesn't function as money, which is a separate topic again. But that's my take on it. That the US is gonna bring the entire global economy down with it. That's the problem with South Africa is gonna fall victim to that. I mean, look at what happened 2020. The dollar has been losing its value and oil has been going up. When oil goes up and there's so much inflation in the US, what happens to South Africa? We import a lot of oil. We import 4 out of 5. We only make 1/5 of the we only create, or should I say we only mine 1/5 of the oil that we consume, or the petroleum rather. But I'll just keep it to crude oil, right? Because it's not the same thing, because it has to be refined and all these processes. But we only produce 1/5 of what we consume. Where do we get the 4 out of 5? Where do we get the rest? We get the rest from America. We get the rest from especially Saudi Arabia. Sometimes we might get it from who knows where. Uzbekistan, all these countries that have a lot of oil reserves. So we get all those things from those countries. And imagine if the price of oil goes up, we are screwed. It means petroleum in South Africa, the petrol that you get at the station, at engine garage, Shell garage, BP,
petrol.
it's gonna go up.
Petrol. We're already screwed with petrol, dude. Petrol prices are crazy. It's almost equivalent, like it's 18 rands, 7 cents a liter.
Imagine. How high is that? How high is that? I don't remember the last time it was that high. I don't remember.
So, and these are the consequences of being tied to the dollar and also having an unproductive economy. And it's not conspiracy theory, what Dumisha just said, that the trade deficit goes high, the dollar loses value. It's because the dollar, United States, is not giving anything lucrative to the market. No one is willing to buy anything from there because they don't have anything to give to you, because all they do is consume and create all the debt. But they'll have somewhere, somehow, to pay for this debt, because there's certain things they will need from other economies, and they're going to hold them liable at that, because it seems like the United States Treasury just likes giving out bills.
Stimulus. I mean, this is just crazy. This is what the US is doing is just crazy. I mean, big government always leads to massive disasters. We've seen that across history. So my advice is just think for yourself. I mean, these things are happening. What are you going to do about it? I mean, I don't know. I think that's all I have to say. What do you have to say, Sia? I think that's all I have to say for this episode.
What I have to say is, banks are cruel. That's a topic for another day, guys. I hope you enjoyed tuning in. I'm Siyabonga Chuma, accompanied by my boy, host Dumisha Ramodisha. Thank you for listening.